Welcome back. Now, new data from Statistics South Africa shows mining production fell 2.7% year on year in November, reversing gains seen earlier in the quarter. Coal, iron ore and gold were the biggest drags, while manganese and platinum group metals offered some relief. On the revenue side, mineral sales were flat, highlighting ongoing pressure from global demand and price volatility. Mining Director at Modern Corporate Solutions, Peter Major, joins us now to unpack what this means for growth, jobs and investment. Peter, thank you so much for your time today. Starting with this print, were you surprised by the downturn, given the upward trend we've been seeing for most part of 2025? I mean, the last time we saw mining production in negative, well, not necessarily negative territory, but dropping, was in April.
I was pleasantly surprised when I saw these results. It's nice, especially if you look at a graph, you can see we've been increasing our production almost every month for the last 12 months. So it's making a real nice trend up, and I would love it to continue because the short-term trend, meaning the last 12 months, looks great, but all we're doing is getting back to where we were 5 and 6 years ago. And the statistics department doesn't provide a 10-year or a 20-year graph, which we wish it would, because then you'd probably see, ooh, we're hitting where we were 5 years ago, but we're down where we were 10 years ago. We're down where we were 20 years ago. Now, that's not nice to know. That's bad to know. But let's be happy. We're starting out this year. Okay, the figures only go to the end of October, but gee, the last 12 months of recorded production is good. Yeah. And I think if you break it down, where did the big numbers come from that made that positive increase? It's iron ore, it's chrome, it's manganese. Well, that's related to Transnet. That's related to our transportation. So it means things are getting better at Transnet. And maybe that's because the mining companies are playing a bigger role. Maybe the government's not trying to have microscopic control over who puts in the money, who gets to control the money, what part of the money gets spent here and there. Bottom line is it's positive, and we should all do anything to keep it going.
And just to interrupt you there, you did notice that we saw a bit of a blip in the November print with output down 2.7%, right? So that not necessarily a cause of concern for you at the moment, where the likes of coal and iron ore were the biggest drag.
Yeah, look, coal was just slightly negative. It's basically flat. What can we make of that? You know, our coal production's been flat for 15, 20 years. It'd be nice if they were all increasing. We're a growing country. And that means you have to grow your mineral production because we're a mineral dependent country. And yeah, government should be held to account here. Whether it's policy, whether it's bad spending on infrastructure, they're not managing the economy. To just say our production's getting back to where it was 5 years ago, but it's still down on 10 and 20. That's something to be ashamed of. But people will say, oh, the trend is your friend, Pete. The last 12 months, the trend is up. So yeah, let's keep it going up. And then government can take some accolades for it.
You know, it's been interesting to see the kind of challenges miners have been contending with. You know, on one side, we've seen a number of precious metals, your golds, your silvers, we don't necessarily mine silver, but your golds and your PGMs, those prices in the green, the likes of a copper also making gains. And that's sort of a situation where you have, I guess, the market really doing well, but here at home, we have struggles like high electricity costs, high labor costs. You know, it's just been interesting to see how they've been able to contend with those kind of risks. Just your reading on that, Peter. You mentioned there that perhaps government needs to do more. We are seeing some, you know, reforms coming through when it comes to Transnet as well. But, you know, some analysts might argue and say that it's still a bit too slow.
Look, it is too slow. These are unprecedented times for the gold price. And we're not taking advantage of it. We've fallen to, I think, below 10th in the world. We've still got more gold than any other country by far, but we can't get it out. It's like you've got this giant garage or warehouse, and you've got various merchandise stored in your garage. And say there's a boom in clothing. Clothing's doubled in price. All you can sell, the market will take it and then some. And we've got clothing in the warehouse, but we don't know how to get it out. Or say you've got garden tools for sale or fertilizer, and the price has gone berserk, and you know you've got it. You've got more of it than your competitors, but you don't know how to get it out. So you're missing this. This country averaged 600, 650 tons of gold every year for decades. Decade after decade, we put out 600, 650 tons of gold. Now we can barely put out 90. And it's been like this now for years and years. But the gold price has been going crazy for years and years. Our PGM production, it's been flat 10 or 15 years. And there's no big mines coming online. And yet the PGM prices, they have gone berserk. So the world is doing all it can to help us by paying obscene prices for these commodities, but we're not doing anything to increase the production. So we're not helping ourselves. The world's trying to help us all they can, but we have to help ourselves.
Let's leave it there, Peter. Thank you so much for your time and taking us through that print and, walking us through the dynamics playing out in the mining sector. That was Peter Major, Mining Director at Modern Corporate Solutions.